Hey, what's going on, guys? Wanted to jump back on here, get back in the rhythm of sending out these market updates to you. Um, a lot has happened in the last, 6, 8 months here. I haven't sent out this market update in a little while, so kind of want to give you a little recap of what's been going on, changes that have been happening. We'll go through market performance, what happened last year during 2025. We'll talk about what I expect and we expect at Sierra Ridge coming to 2026. I want to quickly cover the tax reporting summary that I sent out to everybody, and then go over a couple last minute housekeeping items. So that's the agenda for today. We'll jump right into it. What's been going on? So, as you guys all know, unless you are a client that came on within the last 2 months, and LPL is the only thing that you know thus far, we made that transition from Next Financial Group over to LPL. That was a big, big move, and a lot has changed during that year. Well, I think probably everybody knows, but last year I got married. We moved into a new house, as you can see. Got my new at-home office. Looks a lot different than the videos that you used to see. I have this weird my blinds here. I got to figure out for my videos going on, but it's right directly in the middle of my face. So I kind of got to lean to the left and stay away from that. We'll get that. But it is all, test run, first video in the new place and everything. So the reason I hadn't sent out one of these videos in quite a while is because I physically didn't know how to do it at LPL. At Next Financial Group, I had it so dialed in on this is where the disclosures you need. Here's where you upload it. Here's who you talk to. Here's how you get it approved. I mean, I knew it boom, 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 and it was like clockwork, easy. This is going to be my first go at uploading and working with the LPL compliance department. So it's a little bit of a trial run. I'm recording this on Friday the 20th here. By the time it gets to you guys, it might be a few days. So hopefully all will go smoothly and we'll get this approved quickly and sent out to everybody. So that was one of the reasons. The other reason was obviously we had to move every single account from Next Financial Group over to LPL, which was a lot of work. I mean, luckily, Christy, Michelle, Caitlin, and Melissa, my admins, were absolutely amazing with everything that they did. You all received Adobe signs and stuff from them. Again, unless you're a brand new client, but they were a tremendous help with all of that. So thankfully, I had them, but it was still a lot of work. I had to go through and validate all of the accounts, basically making sure that all of your social security numbers were right, cell phone numbers were right, emails were right, and some of them came over incorrectly, which some of you saw. You had the wrong email, wrong address, whatever. So we got all that updated and fixed, making sure all the investments were still came over just as we were wanting them to. I mean, it was a lot of work. I mean, you can imagine all the accounts that we had to go. I mean, I personally had hundreds of them that I had to go and double check and make sure that everything was transferred over correctly. I mean, it was a lot. So luckily, we're basically 99% through that. There's still some little tiny things outstanding that I'll be reaching out to you guys individually if we need a couple last minute, or not last minute, very final things signed. But everybody has moved over to LPL. All the accounts are successfully moved over. And, it was pretty much seamless. Hopefully on your guys' end, you didn't even really have to experience any of that. And all of a sudden, it just magically appeared over at LPL. That was the goal. And I've already gotten a lot of compliments about the new tech platform, Account View. I personally think it's so much better than Clear One. Hopefully, you guys all agree too. It's very a lot easier, a lot more intuitive. I just think it's a better overall platform, and that's one of the benefits of going to such a big company like LPL, right? Is they just have the money and the ability to have such larger budgets for programs like that. So um, that's kind of everything that's been going on. Personal wise, I'm sure most of you already know, but I did get married last year. Of course, we moved into our new home. We were remodeling our house during that whole time of the LPL transition as well. And then, unfortunately, my mother-in-law did pass away last year, so we had to deal with all of that too. So it was a lot, like from work to personal wise, everything changed. It was pretty crazy, honestly. But we're on the back end of that now. Feel blessed to just be past all of that, and we're just back headed in the right direction and getting very more used to all of the new programs and everything that we're doing on this LPL platform. So going forward, we're going to be back in the rhythm of getting these out. I want to send these out every single quarter with different value adds that I'll be sending, like the tax information form. So you'll be seeing these going forward now that I will have known how to get through the compliance department. All right, so let's jump into it here. What's been going on market performance wise? I just want to pull up my notes really quickly okay. So last year there was a lot going on. the markets did great. I mean, if you see through the end of 2025, this is January 1st through December 31st. Dow was up 13%, S&P was up 16.4%, NASDAQ up 20%. Obviously, our tech heavy index here. Tech's been leading the way, up and down, but been doing really, really well. Obviously, with everything going on AI wise, tech is been performing fantastic. So, couple things, takeaways from the end of last year. Number one is that staying invested beat timing the market as always. As I tell you guys, it's about time in the market, not timing the market. And we could see, there was a little bit of a dip last year. If you remember, almost a year ago at this time is when everything started. I remember a lot of negative news coming out. Luckily, I have great clients, and hopefully it's because I do a good job of, helping explain things. But you guys are fantastic about understanding your overall game plan, and I really don't get a lot of people, or hardly anybody ever, actually that gets really nervous with these short-term dips, which is great, and that's why I send out these market updates and why I try to keep up to date with everything. Hopefully, that's the reason why people aren't panicking in some of these short-term dips. But there was a lot of bad news that was coming out. There's always bad news. There's always going to be another boogeyman, and a reason that people feel they should invest. But a couple of the reasons that I remember from last year, inflation was supposed to be re-accelerating. That's been a huge theme. I mean, for the past 3 or 4 years, is inflation is an issue, right? And then because of inflation, it started to become a thought that the Fed is going to screw this up. They're not going to have a soft landing. They're going to either not cut fast enough, or they're going to cut too fast, and it's going to just crash the economy. I mean, that was a big, big concern that I remember people were talking about for a long, long time. Or that rates might not get cut. They might stay higher for longer, which would be an issue because all of a sudden the consumer would want to stay close to their dollar. They're not going to be spending as much, which would be a bad thing for the stock market. So basically, the Fed was in between a rock and a hard spot, man. It was like they can't, if they overcut, if they cut too slow, if they don't cut, it's all going to cause issues. But as we've seen, I mean, regardless of what the Fed's been doing, market's been performing very, very strong. Another one was, here comes the recession. Here it comes. This one happens every single year. At the beginning of every year that I've been doing this, somebody's calling for a recession, and at some point somebody will be right. It's not an if, it's a when. There's going to be bad market times, but the longer that you say it, I mean, it just becomes so. Anyways, it's always a thing. And of course, that didn't happen this year. This was a big one, though. Trade tensions, the tariffs, and geopolitical fears. I mean, that one was actually really crazy, and I think what mostly caused this dip here in April and May of last year. If you remember, whatever news came out about the tariffs, it changed every day. I mean, we would go to sleep and there would be one tariff coming out, and the next morning it had changed. So, I mean, that was causing a lot of volatility in the market because, as you guys know, the market doesn't mind bad news as much as it hates uncertainty. And this was a really big time period right here through March and April and May, where there was a lot of uncertainty about what was happening with those tariffs. So that was causing a lot of concern at that time. There was obviously election anxiety, and then this one's kind of continuing too. The AI and tech bubbles. A lot of people think that AI and just tech in general is way overvalued, that we're in some sort of a bubble, just like we were during the housing crash. I would disagree, but that's neither here nor there. And tech continued to do very, very strong. So all of those reasons, and they're not fake reasons. They're real, and it's very fair to have concern about them. However, as you guys know, for my aggressive investors out there and people that are 10 plus years away from retirement, even 7 plus years away from retirement, you don't need the money this year. You don't need the money next year. We're not concerned about what the market does in the short term. We're invested for long-term growth. And then for those of you that are actually taking distributions right now, you know that we already have our safety net set up. We have our speed limit spending report set up. We have our barriers on what we're going to do if the market continues to do well, if the market falls, and we're prepared with good cash positions to weather any potential storm that comes. So we've talked about all this. We're prepared for volatility. And I've been reading a book recently. It's called The Behavioral Investment Counselor. It's really good. But it was talking about how you should be excited about volatility. And that kind of is a backwards way for most people to think about it. Most people, when volatility comes, they get nervous. It makes them think, okay, we need to pare down our equity positions. We need to get more conservative. We need to get away from it. Truthfully, you should be welcoming volatility and actually hoping for it. And the reason is, if you have volatility in your portfolio, that means that you have good equity exposure. If you have good equity exposure, that means that you're going to experience superior returns over the long run. Now, when I say superior returns, I'm not talking about 80% annualized returns. I'm talking about outpacing CDs and savings accounts and keeping up with what the stock market should be doing, right? Long term, the S&P normally on average is somewhere around 8 to 12% over 10-year rolling period. So that is what I'm deeming superior returns. And we have to have equity exposure in order to keep up with those sorts of numbers. And if we have that equity exposure, we have to have volatility. It's just how the market works. So enjoy the volatility, embrace it, look forward to it, because that means you're doing the right things to set yourself up for long-term success. Okay, so that brings us to the question, what the heck's going to happen in 2026? I don't know, which is a great answer. I know you guys love that. But anybody that tells you that they know exactly what's going to happen is absolutely lying, and you should run away from them immediately, as fast as you possibly can. I have thoughts and some theories on what's going to happen, which let me change my time frame here to year to date. So basically year to date, tech's been, I'm not going to say beat up bad. There's some individual names that have been hit pretty good, but the NASDAQ's down a little over 1%. S&P's up marginally, not even 1%. Dow's leading the way here, which, you know, the Dow's actually been the laggard for the last few years, but up almost 3%. So a couple things that I think about heading into this year. I'm bullish about the market this year. I think by December, end of year, the market will actually be positive, but I think we're going to have a lot more of a rocky ride getting there than we have experienced in the past few years. And here's why. First reason, we have a lot of tailwinds. There's a lot of things that are actually helping the market right now. The main one being Trump is going to do everything in his power, you know, regardless of what political side you stand on. He is so pro-U.S. business that, at least in his mind, everything that he's going to be doing is going to be to help the U.S. consumer and help the U.S. stock market propel forward. So all the policies and things, you know, potentially should be helping that. From a headwind perspective and things that are a potential negative, in my mind, it's purely the fact that we're hitting new high after new high after new high after new high, almost like on a weekly basis, which is not sustainable. I mean, there's never been a period in time that the market goes up in a perfect linear fashion forever. It just can't happen. So I think investors are going to at some point take some chips off the table. I do think that they're going to be a little bit more skittish with potential bad news just because of how high valuations are, which will cause, you know, a little bit more volatility, but also I do think it will create some buying opportunities for people that have excess cash on the sideline. So again, expect a little bit more of this throughout the year, but appreciate it, enjoy it, because that shows, especially for you guys that are a little bit younger and a little bit ways from retirement, that you're invested in the appropriate manner to help you for your long-term success. So that's what's been going on last year. That's what happened market-wise last year, what we expect moving forward. So let me change courses here. I'm going to share a different screen for you. Talk about taxes that's coming up. Okay, hopefully you can see my screen here with this tax reporting summary. I sent this out to everybody kind of between December and January. The only people that didn't get this is if you just had like one Roth IRA, then you're not going to get any tax forms. There's no tax consequence for investing into your Roth IRA. You can always let your CPA know that you did make those contributions, but it's more of a record-keeping thing than it is actually affecting your taxes. But a couple things to look out for. Basically, for putting any contributions into your retirement accounts, you guys are going to get a 5498. Those are not on account view, but you will get those mailed to you. Again, more of a record-keeping thing. The only people that, which I don't have to have even a single client actually that has invested into a traditional IRA. The only people that did traditional IRA investments were rollovers, and anybody that did a rollover from your 401ks, you will get a 1099-R. And same if we did a backdoor Roth contribution, you're going to get a 1099-R as well. But I put all of the notes in here. I listed out every single account that you guys have, what tax form you can be expecting and why. So feel free to give this to your CPA as well. But by now, all of you should have received your 1099s and everything that you need. If you have any questions about that, just call me. If you can't get it online or just want to chat, I can quickly explain what those forms are and what they're needed for. So that's all I have for the tax reporting side. I just want to show you one more thing here. Okay, last thing I wanted to talk about was I got this in the mail. And so I was like, what the heck? I know I'm probably a lot of you guys got this same letter. It says it looks like a change has occurred to your above strategic asset management program. SAM is just the name of the platform that all the investments are held under. And that you'll no longer be responsible for security transaction fees. We're writing to confirm that change and to share a few helpful details about what that means moving forward. Okay, when I read this, I was like, what the heck? I was paying securities transaction fees and you were not. Okay, this basically what happened was when we moved over to LPL, it was under agreement that no client was going to be paying any transaction fees. Like that was a written in our contract that would not be happening. LPL had made a mistake on that and had not actually set up the accounts correctly. No, you guys were not charged a single transaction fee. However, basically in the back office, they had to check a box that was not previously checked. And by doing that, it basically triggered sending out this letter to everybody. So I would have to imagine that mostly everybody was getting this letter, especially if I was getting them for my personal accounts. But just overall know that you were not charged any transaction fees. You will not be charged any transaction fees. And what that even means is, that we could set it up where every time we go in and make a trade in the account that you would have to pay the charges. Again, as I've told everybody that's during our intro meetings when we first talked, that's not a thing that you ever have to pay for. So basically you can disregard this. Nothing changed. You were never charged it and you will not be charged it going forward. So just wanted to clear that up in case anybody else got this letter and was like, what the heck's going on? So that's everything that I have for you guys. As always, please give me a call at any time if you have any questions, but I will be talking to everybody soon, as believe it or not, we're only a couple months away from starting up our quarterly reviews again. So have a great Friday, everybody, and I will talk to you soon. Take care.